Off here. Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading futures markets using Viper tools, you are absolutely in the right place. Tonight's topic is pick your instrument and your trade type. So without further ado, let's get the disclaimer out of the way so we can get over to charts and start looking at trades, which of course is why everybody's here tonight. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Excuse me, got this tickle in my throat tonight. Sorry about that. Where was I? Trading futures does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Okay. By the way, if you're on a free trial or you are visiting us this week, welcome. Welcome to you. Hope you're enjoying it. We had a good week here so far. We kicked off, I think Monday was President's Day, so Gary had an educational thing and it was my birthday, so that was pretty cool. And then we've had some pretty decent volatility here. I'm going to start with the ES. For those of you that are completely new, I'm just going to take 1 second and explain what you're looking at here. We trade futures markets on an intraday basis. What that means is that we have certain times that we like to trade the futures. We have members of Viper literally all over the world, and they trade different instruments outside of what we show and teach here and outside of the room. Some of them trade currency futures like 6E. This is the Euro futures. Of course, in the live room, we've got crude oil. We're going to look at that today. Dollar index. Lots of traders use our tools for different things, so we're excited about that. Here's ES. All the current equities are on the March contract. Gold, of course, the Russell, and we used to trade YM. These are the bonds and the notes. We don't really trade those in the live room, but they have very good volume. This is the 10-year notes and the 30-year bond futures, ZB and ZN. So we are connected to a data feed to our broker, NinjaTrader, and so this is the data that you get fed in from the data feed. And you can see here that the indicators that we have created are the background colors, red and green, and this sort of intermediate color, transitional color, if you will. Bar colors, power meters, these are your trends on the chart, predictors. Toggle this on and off. And then, of course, the most prominent thing on here is obviously the bands and the mid-band. So there are 4 bands below the mid-band. The thick line in the middle is called the mid-band. It features very prominently in our trading, along with line 2. So you have numbering from the bottom, band number 1, 2, line 2, the thin red line. We'll be talking more about that in a few minutes. And so 1, 2, 3, 4, mid-band, and then 5, 6, line 6, 7, 8 bands, 8 being the outermost at the top. So we are basically what we look for is you have several different market conditions, but the 2 most prominent that we look for are what we call a range. This is where a market does not have a trend. It's basically going sideways. Characteristics of a sideways situation would be, let's look at some examples of range bound conditions in the markets. One would be right here. Like such. So what are the features of a sideways range-bound market? Well, by definition, a range is obviously lack of a trend. And so you can see that several things are clues to tell you that a market is sideways. First of all, you can see that the support and resistance levels more or less stay about the same. so you don't get higher highs and higher lows that you would get in a trend. That's one of your first clues, right? And we can put lines in here on the charts that help us see this, and that's why Gary does the lines in the room, to help visualize ranges and trends, right? The other characteristics are a flat mid-band, and all the bands are more or less flat and sideways. Can you see that? See how when you have a trend, like over here in this downtrend over here, the bars are heading down with lower highs and lower lows, and the bands are stair-stepping down, the mid-band is stair-stepping down, and you have red candles. In an uptrend, it's primarily blue candles, and you're looking to buy support, right? Quick show of hands. How many of you like to trade ranges? Like to trade ranges? Anybody like ranges? Anybody not like ranges? You just don't like them. You've tried to trade them. You looked at them. You took some sim trades in them, and for some reason, you just don't like trades or ranges. Wow. Almost everybody's saying it's ranging from no, me no like, to I hate them. That's some pretty strong words there. You hate a range. I'd rather have a trend. That's what my little granddaughter Kennedy used to say when she was little. Me no like, when she didn't like something. Yeah, me no like. All right. Well, you know, I've taught how to trade ranges before, and so I've shown that. Obviously, one of the things to avoid is, and I'll just jump sort of ahead a little bit on this one, is that you got to look at the distance from the midband, because normally in ranges, you know, you're not trading the midband, you're trading the extremes. So you're either selling resistance, covering at the bottom, or buying support and taking profit at the top as it oscillates through a range. The range has to be at least 20 to 25 ticks. Let's look at this one right here. Support at user round number 37, and resistance at 44-ish. 7 points times 4 is 28 ticks. This is sort of the lower end of a tradable range. So in trends, we tend to take trades at the midband, minimum retracement criteria trades, and deep retracement trades. So let's go ahead and move into that topic next. So we are what you call, the other characteristics I meant to say in a range is that you get either this opaque color here, which is a lack of a trend, or you get this striped shirt effect where you get like green, red, opaque, etc. So it's a striped shirt. Midband and all the bands are flat. Support and resistance levels are all the same. And so when you see a range, this is where you got to make your quick determination, hey, am I going to trade this or not? And if the answer is no, then you have to go find something else. You have to do one of two things. Wait till it comes out of the range and look for a trade, right? Or go find something else that's trending that you like to trade. Let's go over here and look at some examples of trends. Let's look at examples of trends. So I'm going to do two things. We're going to talk about a downtrend, and then we're going to talk about the characteristics of an uptrend, and then we're going to take various charts, and I'm going to show various market conditions, and then as a team, we're going to identify whether market's trending or not. Okay, we're all going to be experts at this by the time this webinar is done. Now, when you go into a trend, now let me orient everybody here so we're all on the same page. I'm here in California. And so this was the early morning of the 14th. So this was Valentine's Day. I think that was that last Thursday? I think it was last Thursday. Yeah. Valentine's Day here. So, you know, translate this to your time. If you're in Central Time, you'd add 2 hours. If you're on the East Coast, add 3 hours, etc. If you're in another part of the world, adjust the time accordingly. So as most of you know, this is the beginning of the European session. And you can see that there was a very strong sell program that kicked in here, pushing the E-mini S&P down from all the way up here at this, 5960 area, very precipitously, all the way down to this area around 36, 34. Let's talk about, you've heard us say many, many times that we are retracement traders. So what does that mean? Hold on one second, please. Stand by. My apologies, everybody. I'm sort of fighting through a little bit of a cold here. We'll be all right. We can do it. We'll get her done. So the equity markets open at 6:30. Gary opens the live trading room at 5:55, so that's over here when the live room would be opening, right? Sort of right, more or less in here. Here's 6 o'clock. 6:30 is right here when the equity markets open. 6:30. So clearly, on the morning of the 14th, we were in a very protracted sell-off, which is a downtrend. Now, let me ask a pop quiz question. I'm going to give you 5 seconds on this one. I'm going to go ahead and I'm going to do it this way. I'm going to adjust it this. I'll give you 5 seconds. This is a yes or no question. Are you ready? Between this line and this line, did any trades set up? Yes or no? Between this line, just type in a Y or an N. You got 5 seconds. Boop, 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 boop. Are there any trades that set up here? Now, I'm not talking about up here. I'm not saying whether you got short up here. That's not what the question is. The question is between here and here, was there any place to get in this market? Yes or no? 3 seconds left. 2 seconds. Just a Y or an N. Between the lines, was there, based on the criteria that we have outlined for trade entry, was there an opportunity to get in? Yes or no? 1 second left. Time's almost up. Yes or no? Based on our requirements for trade entry, between the lines, yes or no? Time's almost up. Time's up. No. The correct answer was no. Because, now that's why I said we're not looking over here. Okay, we're not asking, did you box it? Did you get short from up here? This is what we call the thrust. When markets go into a trending condition, the first thing that has to happen is what's called the thrust in the trend direction. So obviously, in the case of a downtrend, you would get a thrust down, which is this. Let's look at 2 trade entries that set up after this time period. The first one, and I'm just going to explain this to everybody because we got quite a few new faces here. They're just kind of learning this for the first time. So let's go through it in detail so we're all on the same page, okay? Most of you know and understand we like to use our Object Trader tool, and we like to use region boxes. There's whole videos dedicated to that, so I'm not going to spend a lot of time on the actual how to put the region box together. You can find tons of videos that explain that in excruciating detail. Tonight we're going to look at trade entry setups and where you should be looking to get in. Now, in the case of a in the case of a downtrend, the primary direction is down, obviously. The midband and all the bands are stair-stepping down. We have a prominent red stealth line here, the sneaky snake line. Bars are predominantly red. And so a retracement would be a push back up in this direction here like this. Now, in order to qualify for a minimum criteria trade entry on a short, you have to close above the stealth line, the red line here, this line right here, and line 2. So, do these bars close above stealth and line 2? Does this qualify as a minimum criteria trade? Short. Yes or no? Based on the criteria as I just explained it. Right here, this box. Closing above stealth, sneaky snake red line, right? And line 2, the thin red line at the top of band 2. Yes, the correct answer is yes. This met the criteria for a minimum trade entry to the short side. So when you drew this region box using the OT tool, you enable short only, no longs. Now the reason we do that is that it's quite possible that you could get a deeper retracement with bars closing up into here. Okay? And you don't want to get long. This is a downtrend. So if you get long in here, you get stopped out. You get double whammy. You take a full hit on a stop, then you miss the good trade. So just to be clear, in order for this to qualify as a minimum criteria trade, it has to be in this band right here above line 2. So I'm going to put it right on here. This is what we call a minimum criteria short trade. Setup. Sorry, I'm slurping around here. My apologies, everybody. Now, if the market goes higher and enters this area right here, which is bounded by, on the bottom side, band number 4 and band number 5, including the mid band. So by definition, if you come into this zone right here, either the band above or below the mid band and or directly on it, like such, this is what we call a mid-band trade. So here again, keeping with the notion of the downtrend, this is our thrust. Our retracement is back up into here. So this is what we call a minimum criteria, or a mid-band short trade. Now, if it goes deeper up into band number 6, we call this a deep retracement trade, and we'll look for some of the examples of some of those. This is not a trend change. Sometimes the bars will actually turn blue in a downtrend. It will come, and you'll hear in the room things something like if that market comes up into up anywhere around line 6 and rolls, kisses and rolls or whatever, I would look to short that. Then this is what you call a minute. Okay, so you have minimum, mid-band, and deep retracements. Now, why do markets retrace? Mid-band trade. Why are they doing? Why do they do this? What's going on here? It's a downtrend. Why is it going up? That makes no sense. It should just go down, right? Just go down. Why does it just go down? Why is it doing all this kind of retracing stuff? Profit taking, short covering. Yes, exactly. That's exactly what that is. And this over here is what we call a deep retracement trade in a downtrend. So from a short point of view, from a downtrending point of view, these are the 3 entry trade types. Now, I've said this in other webinars, and it bears worth repeating because it's extremely important. We, based on our system here, are going to teach and show all 3 types, and there are other types of trades that we teach and show, right? There's all kinds of other types of trades that we show. Now that you know what they are, the question is this: do you need to take all of them? Do you need to take all of these trades when they set up? So when a minimum criteria trade sets up, should you take it? Should a mid-band trade comes in, should you take it? Deep retracement trade, should you take all of these trades when they set up on a chart that you're trading? Yes or no? Do you have to? Let me phrase it in a different way. Do you have to take all of these trade setups? whenever they appear on a chart. No, you don't have to take all of them. Now, why am I saying that? I'm not disparaging any particular trade. What I'm explaining to you is that if you want to get good at a trade, to learn the system and try to get to a point where you can get out of sim and start making some money, I would strongly urge you to start with the mid-band trade like these right here. I would start with these. Just learn to see these setups right here. We help you in the room, and you can practice them in sim, and you can do them in market replay, and you can look for where the markets came up into this area right here and or sitting right on the mid-band itself, as these bars are doing right here. I would strongly urge you to look and practice minimum criteria trades and the deep retracement trades over here. However, let me come to the point. You may not be, you may find that over time you're not particularly good at some of these trade types. Like, for instance, let's use an example. Maybe you saw this minimum criteria, you came in, you nailed it, you made some money. You saw the mid-band, you came in, you nailed it, you made some money. Life is good. A trade comes along. I'm just a hypothetical example, okay? Deep retracement trade comes in. You don't really see it that well. You don't get in right. The blue bars kind of freak you out a little bit. You practice it several times in sim, and you just, for whatever reason, hypothetically, can't get the deep retracement trade. Well, now that you know that about yourself, should you take deep retracement trades? No. The obvious answer is no. You have determined that that trade type is not aligned with your skill set. Here's another problem. Not all, I'm showing you ES here because ES is a fairly, I don't want to say slow, but methodical instrument because it's so heavily traded by institutions and algorithms that, it respects support and resistance lines. It tends to, when it trends very nicely. You can get in and out very quickly. There's huge liquidity. Put a lot of size on it. Okay? But take oil, for instance. I'm just going to use some random examples. Let's just take, like, here's an example of crude right here. It's crude right now. What do you think about that? What do you think about trading crude right now? What do you think? What do you think about that? Anybody want to jump in the middle of this? Are you getting long? Are you getting short? You taking mid-band trades? What are you going to do with when a chart looks like this? Excuse me. Is this deep retracements? Shallow retracements? What's the trend? Madness? Come to Papa? This is a mess? Yeah, Mindy? Yeah, I would definitely say this is a mess. This would be a chart when you see something like that you would, yeah, there is no trend on this. Exactly. No, this is a choppy mess. You really want to avoid oil or any instrument. I'm not picking on oil. I'm just saying that when oil's trending and you've seen in the room and you've seen Gary do it day after day, you can make pretty good money. On choppy days like that, you probably don't want to put that baby and tuck it in the corner of your fourth screen or whatever and just come back to it later. Okay, now that we've looked at range and we've looked at downtrends, let's go and look at an uptrend and talk about how we trade uptrends. And then we're going to go into charts, various charts, and I'm going to flash various market conditions in front of the team, and you're gonna tell us, everybody here, whether it's trending or not. And I'll help you because I'm just going to help you do an uptrend right now. Okay, so here we go on an uptrending day. All right, so this was the 15th. This is the day after Valentine. This would have been last Friday, right? Yeah, I think 14th was the yeah. Okay, so this was Friday morning. End of the year. Let's just get you oriented real quick right here. In the end of the Asian session here, which kicks off at 5 o'clock my time, you can clearly see that ES was in a sell-off down, very powerful downtrend here. Asian session. European session kicks off. We get some short covering here. Pauses at the midband. And then starts to break up. So characteristics of an uptrend is, remember, the first thing that happens in a trend is what we call the thrust or the push in the direction of the ensuing trend, which in this case you can obviously see is up. Other noticeable things, the breadcrumbs on the chart for you to follow are background will turn green. Midband and all the bands start to stair step up. Bars are predominantly blue. And in the downtrend, of course, you had the red stealth, right? But in the case of the uptrend, you have the green stealth. Right? So like we do in the shorts, where we look for short retracements into resistance to sell the market, we do quite the opposite in the uptrend. We are looking for pullbacks to support to buy. Let's look at some minimum criteria, long trades that set up. Here's another thrust here. This would have been 230, 3, 4, 430. Here's another thrust like such. And here's a retracement giving you a minimum criteria long entry. So when we say minimum criteria long entry, to be specific about it, it's the reverse of what you did in the short. So you're coming into band 6. You're closing below band 6 and the green stealth. So this is an example of a minimum criteria long trade right here. Okay? Here's another example of one right here. Close below line 6. Close below the stealth line. So you can see you can see it, right? You see it. Thrust, retracement, thrust, retracement, thrust, retracement. And then, of course, this trade turned out to be an absolute killer trade right here. Made a lot of money on that one. Now, how about over here? Pop quiz, 5 seconds on the clock. This area right here that I'm circling with my cursor, is this a minimum criteria trade, yes or no? Right in here. 5 seconds. Type in a Y or an N. This area right here engulfed by the circle. Is that a minimum criteria trade, yes or no? 4 seconds left on the clock. Just type in boop. Either it is or it isn't. Yes or no? 3 seconds. In the circle. Does that meet our definition of minimum criteria for a long entry? Now you have 2 other examples to the right, so I'm kind of helping you out a little bit there, right? Just a yes or no. Two seconds. Y or N for your vote, yes or no. All right, time's up. Now, this was sort of a trick question, and let me explain why. From a technical point of view, you could make the case that this one bar here had a close. It was a kind of a hanging man doji candle. That the close of the bar, technically speaking, was below line 6, the thin green line at the top of band 6, yes, and the green stealth. So from a technical point of view, yes. The answer is yes. I just want to be clear here. These 2 bars are right on the cusp of meeting the criteria in the fact that they close right on line 6, and this excuse me, and this bar closes above line 6 in the stealth right here. And it actually turned out to be a good trade. Ideally, So the answer to the question in terms of technical explanation is yes. That one bar didn't meet the criteria. Okay. Now, ideally, you can see that in terms of trade entry that you would like to take in these types of retracements, you would much prefer a condition like this, right? Where you have a number of bars that sit down here for some period of time to get in, as opposed to one bar, the wick of a, just a little hanging doji, which probably happened pretty quickly. Yeah, you really want to see a full candle or multiple candles. So, and it really, it depends on the condition it happens. If you're in a strong, powerful uptrend like this, there's pretty low risk to go ahead and take that trade. You could put a box around it. You could put, limit orders in here. You could put a buy order in there. You could, all manner of ways. You can put, your line retracement tool, and when it closes up, you're in. And then you go ahead and you just put your initial stop right under here. So it's super tight. So it's a very low risk trade, particularly in the direction of the trend. See, you're filled on this bar. Your stop's right under here. One of these bars, this bar, or this bar. Your stop's super tight. If for some reason you get a couple of bars close up and then, some tweet comes out and freaks the market out and all of a sudden just tanks like that, which it didn't, but if it did, you got to stop in to protect you. It's a small hit, not a big deal. In this case, it just worked out, turned out to be actually quite a very nice trade. So for minimum criteria, especially in a long condition, in an uptrend, you really want more bars like this one here, this one here, this one here. And you can take these, but be very cautious with tight stops. Okay? Is that clear? And so just like the downtrend, all right, here's what we're going to do. Let's do an exercise together. Are you ready? All right, here we go. We're going to do an exercise together now that we're all experts in trade entry types. Yes? Minimum criteria, mid-band, and deep. Now, I'm going to advance this chart in real time, and I'm going to reconstruct real time on the morning of the 15th. And when you think you see a mid-band trade, you type in either M or MB. Ready? Here we go. I'm going to help you with the obvious. The obvious is we are in an uptrend, and so the trade will be long. So you don't have to call what type of trade it is. We're in an uptrend. You're looking for longs. And when you think you see a mid-band trade, you type in M or MB. Are you ready? Here we go. All right, just to orient you here, this is 541 right here. So we're going to start our exercise right now. 544, 553, 6 o'clock, the room's open. The live room's open now, 6 o'clock. 622, 627, 628. Bit of a shotgun and some bars there, 628 before the equity markets open. Okay, 630, 629. There's your 630. That's the equity market open. Just blow it up a little bit more so you can really see the bar real good. Okay, there's 632. Market's been open 2 minutes. 634. Bar super big so you can see them real good. Remember, when you think you see a mid-band trade, you're going to type in the letter M or MB. Remember, that's our exercise we're doing right now. Okay. Okay, 634, 635, 636. All right, I'm going to stop it right there. Now, let's go back and recreate this and see if you can see it. You know, the reason I do this exercise is because, when you're looking at a real live market and bars are coming in at you in real time, you don't always have the luxury of looking back and saying, okay, what should I have done? Was there a trade there? Should I have gotten in there? Was that a minimum criteria? Was that a mid-band? And I suggest this is something that is really simple that you can do almost every day, is to do this simple exercise like I just did. Start on a chart. Doesn't matter which one, whatever you like to trade. Advance it like I just did, and go back and forth, just like this. Just like this. It's muscle memory for your trading mind. Muscle memory for your trading mind. That's what you're doing. See how you go back and forth like this? See it? Now, many of you typed in M's and MBs when these bars formed right here. Looking back on it, what say you, team? Is this one or not? Now that you have the benefit of hindsight. Those of you who did or did not type an M or MB when those bars formed, now that you see it, is that one, yes or no? While you're pondering that, a huge faction of you typed in M's and MBs when these bars formed right here. Looking back on it. So remember what was our criteria, right? So let's recap. Minimum criteria is here, but that wasn't the question. The question was mid-band. So mid-band is defined by what? The bands above, directly above and below, and the mid-band itself. So think of it this way. Let me give you an easy way to think about this. Whenever bars, here's probably a good way to think of it. And let me think of the best way to put this. When you're in a trend and the bars are pushing the outermost limit of, in an uptrend, it's going to be pushing bands 7 and 8. As it continues to do its stair step up, you're going to see patterns like this, where you stair step up. You might go sideways or slightly back for a little bit, and then you are pushing, pushing the envelope all the way back up again in our uptrend here. And this is really hard to do, but this is going to help you a lot. Here's the way to think of it. If you come into a market, let's do a hypothetical here. Let's do a hypothetical like this is tomorrow morning. Okay? And you come in, whatever market you're trading, Russell, it doesn't matter, whatever you're trading, and the market looks like this right here on the right. Let's pretend that that's 6:15, 6:30, whenever you start looking at the market. Is there a trade in here? What is a good, healthy thing to say to yourself when you first start looking at a market and it looks like this? What should you be saying to yourself? I'll tell you what I say to myself when I come in and I first start looking at the charts. I look back and I say to myself, okay, well, I clearly see it's uptrending, it's heading up. And this trade setup was way over here at 5:25 in the morning, my time, and I missed it. So I can't chase this. I have to wait for a pullback, right? Yeah, you got to wait for a pullback. Patience. You look for longs on a pullback, right? You can't. You should not jump in thrust part of moves. This is how you get stopped out. You get thrust, you get in, pulls back, stops you out, runs up again. You get in late, stops you out. So what I start looking at when I see a condition like this is my eyes are not focused on this because I clearly see that I missed the trade entry, which was over here, right? I missed it. I have to be patient. So I start looking at right here. My eyes are tracking this. I have like a little sweet spot zone where I'm looking at it, and that's like when you hear things in the room like you know, if ES retraces anywhere between like 60 and 62 and bounces in and around the mid-band, I would buy that. That's because as this thing is moving up, I'm not looking here. I'm not looking here. I mean, I might glance at it, but my thinking is here. Does everybody understand the difference? I know it's hard. Look, when you first start looking at charts and you start getting used to doing this, you naturally want to look up here. I know you do. I do too. 25 years, I still look up there. And I say to myself, dang, look how beautiful that trade is. Look at where these entries were down here. This thing is just running like a big dog. Well, I got to wait. I got to wait. So and so think of it as a shifting window of opportunity to get in, right? So when the market goes higher, I can't just sit here and say, well, I got to wait for it to come down here, right? This area is no longer relevant. This area was relevant when the market was here. Let me be more precise about how I draw this, so I'm clear about what I say here. So I'm thinking minimum criteria, I'm thinking mid-band, and I'm thinking perhaps deep. And so as the market continues to push higher, and the opposite would be true in the case of the short, I have a moving window. This is my moving window of trade opportunity. And when it gets up here to here, my window is right here. Everybody see that? So I'm looking here. Now, when these bars... So I guess in a sense what I'm saying is, and this is really hard to do, but if you can learn to do this, you're going to find that your trading jumps by leaps and bounds. Is you got to not try to focus on a thrust that you missed. Because you missed it. It's just too late. You can't chase it. And so what I do is my little spidey sense gets excited and all kind of woken up when I see bars pulling back and they start setting up just like these bars did right here. Let's really zoom in here on this, okay? So in a weird way, I guess what I'm saying is that when a market is thrusting and you miss the trade, do you care about these bars? Do you really care about them? Yes or no? As you're pushing the top here and pushing this and it's thrusting and you're not in it and you're missing it. Do you care? Do you really care? Well, I mean, in a sense you do, in the fact that you want to see where it eventually winds up hitting. And you might want to research some support resistance levels and put some lines up here. Okay, so in that sense you do. In terms of trade entry, no, you have to wait. So this sliding window that began down here is now tracking in here, like this. See it? It's tracking in here. You're looking at it. You're looking. Minimum criteria, mid-band, deep retracement. This is your window. Now, let's be really clear here. When these bars set up here, every single person in here tonight should have typed in an M when those bars formed. Excuse me. Why? And when these bars formed right here, when the bars in this box formed, and when the bars in this box formed, every single person in here tonight should have typed an M into the box. Why? Why should you have typed an M in, or an MB? Because they're in the band above the mid-band. Isn't that our definition of a mid-band trade? This one almost wicks the band itself. So that's how you know. If the market is outside of your window of opportunity to take trades, that's what I'm trying to impress upon everybody here, is you really don't care unless you're in it. Does everybody understand that? Yeah, that is a mid-band trade. It meets the criteria. When the bars go in that area, it meets the criteria, and you should perk up and say, okay, I'm in a downtrend. I better start looking to get long right in here. Let's do another couple examples, because a lot of you, I don't know, you might be asleep or playing with your dog or not paying attention, and that's cool. But I want everybody to get this when we're done. You should look at a chart and instantly know what you're looking at. Let's do a couple of other examples real quick, and then we'll move on to something else. Stand by. want some harder ones? Okay, let me look for a couple hard ones for you, because they're not all easy. Some of them are hard. All right, I don't see any questions on this, so I'm going to completely clean this chart off. Drawing tools, remove all drawing objects, gone. Clean. Totally clean chart. All right, I'm looking for some setups for you here. Just give me 1 second, please. Go back a few more days. Okay, you ready? This one's going to be a little bit harder. What day was this? The 13th, so the day before Valentine's Day. That would have been Wednesday. Late in the trading session on Wednesday. Oh, it's okay, Robert. I'll take some meds. I'll take some cough medicine this weekend and try to get a little bit extra sleep. Drink some hot tea. Hopefully, early next week we'll be right back at it. Okay, here we go. This is going into the close of the day of the 13th, which was last Wednesday. Market looked like this. Well, you tell me when you see a mid-band trade, because I am going to advance the chart right now. Here we go. You don't have to call what direction it is. You don't have to say long or short. You just say when you think you see a mid-band, you type in M or MB. You ready? No, there's not one now. I haven't started yet. Don't jump the gun. We're not counting this. We're going to start the exercise right now. Okay, everybody ready? All right, here we go. Okay, this is going into the close of the equity markets. Now, we're not... All right, let me keep going here. Yeah, we're not, just to be clear, okay, let me restart that. Sometimes I know there's a lot of new people in here, and some of you are just kind of looking at this for the first time, and that's perfectly acceptable. Everything to the left of this line does not qualify for the exercise that we're doing. None of this is relevant. You're just looking for mid-bands moving forward to the right of this line. And when you see a mid-band trade, you type in M or MB. Here we go. So we're going into the close last Wednesday. Okay, the market's closed. You're going into the beginning of the Asian session. Starts at, well, you're just right before the Asian session. Let's blow up the bars. I'm going to make them real big so you can see them real good. All right, yep, 418. Asian session getting ready to kick in. 4:30. I think it starts at 5, so that'd be 1700 my time. There's the Asian session opening up. 35 minutes in. 7:42, 5:35 my time. Excuse me. 5:36 my time. Remember, when you see a mid-band trade, you type in M or MB. 5:37 my time. Excuse me. All right. All right. Time's up. Did you get them? There's 2 of them. Where are they? Where's the 2 mid-band short entries here? Well, how many of you, show of hands, typed in an M or an MB when these 2 bars formed right here? That's number 1. Then how many of you typed in M or MB when these bars formed right here? That was mid-band number 2. How many of you got both? Mid-band trade number 1 Mid-band trade number 2. These bars are sitting right on the mid-band itself. I mean, it doesn't get any more clear than that. These bars come into the band immediately below the mid-band, which qualifies them as mid-band trade. And this one almost wicks the mid-band itself. Yeah, many of you got both. Good. Good, good, good. So here again, you wouldn't, you got to spare 5-10 minutes. You want to do some practice. You want to focus on mid-band trades. Advance the chart. Oh, there was one right there. Right? Advance the chart. Oh, there's another one right there. Look at that. Go back, do it again, right? Yep, there's one right here. Yep, okay, I see it now. All right, exercise, go forward. Yep, there's another one right there. I see it. This simple little exercise, I'm telling you, and all you got to do, really, it's so simple, is you just want to train your eyes to look right in this area right here. When you're just learning mid-band trades, that's all you got to do. You don't go worry about all this other stuff going on, all the noise in your head, all the news, stuff going on all around you. You just block all that stuff out, right? When you get into this sweet spot here in these circles, this is when you perk up and you say, ho, 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 wait a minute. Wait a minute. This is where I should be looking to get some trades right here. Now, look, they didn't make a whole lot of money, but that's not the point. Some are going to run, others are going to be scalpers. Some don't work out. I mean, that's how you got to do it, right? Yeah, there's several ways to draw the box on this. For this one, you would have drawn the box more or less like this. You've been closed that bar right there. We talked about different entries. You could have limit orders up in here. You could hit a market order. You could draw a box around here. You could put 2 around that. That's super tight. You'd be filled on the close of this one. If you did a looser box like this, where you engulfed all 4 candles, then you would have been filled in the close of this bar right here using the box method. There's other methods we discussed in other webinars to get in limit orders, market orders. You could use the line tool or the ray tool or the wedge tool. You could do a mid-band touch, yes. Now, we've all discussed, I don't want to get sidetracked on that. That discussion is for another webinar, and we can table that for the next webinar because we've covered that scores of times in many other webinars. That's not the purpose of today's exercise. Today's exercise, and most of you did pretty good on this, was to just simply see that the trade had set up here and that this is a short you should be taking. Yes? That's the purpose of this exercise. All right, let's see if we can squeak in a quick 1 or 2 more because we're almost out of time. And these are going to be a lot tougher. I'm going to go a lot quicker, and I'm going to cover a lot of ground. Yeah, that's what I'm going to do. In fact, let me do today. Let me zip through to today. Okay, you ready? All right, I'm gonna get you good. I'm gonna get you real good. Okay, yeah, today was tough. All right, let me start over here. Now, I'm gonna help you out here too. This is the final exercise of the evening. We're gonna do this exercise one more time, looking for just mid-band trades. Now, in the course of showing you this, there will be other trades that might come up. Deep, minimum criteria, whatever. We're not calling those out. We're just going to call out mid-band trades only, and we all understand the criteria for this, yes? I don't see any questions. I'm going to put the line here and show you the chart like such. We're not looking at anything beyond here, this direction. So nothing of that counts. The exercise will start when I begin to advance the chart to the right of this line. Mid-band trades only, you make the calls. I'm going to go pretty quick, too. You're going to have to see these quick. I'm not going to dawdle around like I did with the other ones, throwing softballs, you're lobbing up softballs to hit home runs. Okay, I'm going to go starting right now. M or MB when you see mid-band trades. Okay, there's 720. So you're after 7 o'clock this morning on ES. 7:15. I can't remember if there was any news. I think there was some kind of news that came in. I don't remember. Okay. 7:24. 7:29. 7:40. 7:45. I know I'm going fast. Try to keep up. It's good for everybody to do this. It's a good exercise. You should do it at home, your home office. Practice, practice, practice. Looking for mid-bands, right? Okay, we're coming up on 8 o'clock. There's 8. 8:20. 8:37. Here again, you're not calling direction. You're not saying long, you're not saying short. And you don't have to call whether it worked out or not, or even what the entry is. It's just, is it a mid-band or not? That's all this exercise is designed to do. 9 o'clock, 9:30. 10 o'clock. 11:15. 11:40. 12 noon. We have an hour left in trading. 12:13. 12:15. 12:16. It's 12:30. I'm going pretty fast. Just to explain, like in the past, 15 seconds, I showed something that went from like 12:15 to 12:39. This little cluster of candles actually took about 20 minutes. So I'm going probably 600 times the speed, which is good. You got to do exercise like this. How are you going to see them, right? 12:47. Half an hour left in the trading session. 1 o'clock. 3 o'clock. 5 o'clock. Asian session kicking off. The webinar started right about here. Can you hear me? Everybody hear me? Testing audio? Gerardo said he can't hear me. 5:41. We were about 41 minutes into our webinar here, and the market looked like this. 5:43 my time, and there we are in real time. That's the end of the data right there. How'd you do? Let's go back and let's show where they were, and we'll do a quick grade and see how everybody got them, and then we'll wrap. Mid-band trades. Number 1 was right here. I see quite a few of you typed in and caught that one. I see this as a continuous one till it broke down here. If you typed in, if you missed that one, I would consider these two to be one together. This wouldn't be 2 separate trades in my personal view. There's obviously number 2 right here, so this is number 1 collectively. Number 2. From a technical point of view, I would consider this could be a separate one. That could be 3. Now this turned into be a mess here. This happened right at 8 o'clock as we were closing the room. It went into a range. I would say that when you were range bound, we're going to disqualify mid-band trades in the range like that, right? We're no longer trending. The trend was down. Could you have shorted up here? Yes. Because were these more deep retracement trades? Yes, definitely. You could have shorted. Each one of those worked out. And if you typed in mid-band here, maybe you got to scalp off depending on how tight the box was. I would classify those as deep, not mid-band. So as of this point, you had 1. I'm going to take this off because I consider it to be 1 continuous trade here. 2, 3, not deep. 4. Now, you didn't get much out of this one. You know, depending on how you handled it, you maybe got a scalp, maybe you didn't, and maybe you just stopped out at scratch. Then we move on, 9 o'clock. You could have typed in an MB here, which didn't work out, right? At the time this area occurred, it plowed right through it very precipitously. And if it was green and you've typed in a mid-band trade looking for a long trade, it never worked out. So technically speaking, that is a mid-band trade, yes, but you never got filled long. Okay, right? No mid-band here, no mid-band here, no mid-band here, mid-band here. Most of you caught this, almost all you got that one. Moving on. Market did pause here momentarily. Would you have had long activated in this condition? Probably not. You might have been looking for shorts only, in which case it never filled. But nonetheless, it sat on the mid-band, so that is a legitimate trade. If you had the long side activated, you obviously got long there. Nothing here. This is minimum criteria. Minimum criteria. See here? See how it's not going down to the mid-band? So you didn't want to type it in here. And then most of you caught, excuse me, sorry about coughing like that. One just happened right there. Good, so let's count them up. 1, 2, 3, 4, 5, no, 6, 7, 8. Okay, 8 mid-band boxes, trade setups. They didn't all work out. Most of them worked out. That short worked out. That worked out. Got to probably scalp on that one. Deep retracement. This worked out. That scratch maybe. Missed this one. Never filled long. This worked out. That was a short. This, if you at the time, like I said, I'm just recapping here. If you had short only, you never got filled. If you had both sides, of course, you caught the long. And then the final one was here. So 7. How many of you got all 7? Show of hands. $7 mid-band. 7 mid-band trades. Yes or no? Did you get them all? How many you got? 6. Anybody get 6? Anybody get 5? How many? ¿Cuántos cumpleaños? That means how many years. That's like what's your birthday or something. Like how many years are, how old are you? ¿Cuántos mid-band boxos? 1, 2, 3, 4, 5, 6, 7. Well, 7 or 8. How many you got 5? Oh, quite a few got 6. Some of you got all 7, quite a few 5s, a couple of more 6s. Good for you. You know, out of 7 or 8 boxes, if you're catching 5 or 6 of them, you're doing pretty good. But I would still do the exercise that I suggested. It's really important that you do that. Just toggle back and forth. That's all you got to do. It's literally that simple. Did it go in the bands around the mid-band? Either it did or it didn't. And once you start doing that, I'm telling you, when the market goes in there, you're going to know what to do. This little exercise right here will make you money. All right, I'm going to wrap it up here. This is Stop the Recorder.